Hey economists! Exciting news! Global Forecasting School is hosting exclusive bootcamps in gorgeous Algarve, Portugal. Picture this. May 6th to 31st and June 3 to 28th. Learning? Surrounded by stunning landscapes of Algarve. This time, we are specializing in non-traded sticky price and not the fat till book for our new GFS students. It's an unforgettable learning experience. I've been there, trust me, it's incredible. Next stop, the Dilijan Research and Training Center in Armenia, my hometown. A place where ancient history meets modern education. Join our summer school from July 1st to August 30th for a dynamic learning environment. Develop key technical skills, enhance your research abilities, and receive mentorship from the best in the field. Improve communication skills in an environment all about continuous learning. Don't miss out on these incredible opportunities. Hit the link below to learn and apply. Your future in macroeconomics awaits. Seize the chance to shape your future with Global Forecasting School. Furthermore, over a dozen macroeconomist positions available at the Central Bank of Armenia. We are crafting the best of the bests to develop and implement FPAS Mark II framework, a prudent risk management approach for monetary policy. If interested in these positions and summer program, please reach out to Heike Avedisyan, Head of Macro Directorate at the Central Bank of Armenia. Check the link below for details and apply. For bootcamps in Portugal, connect with asyakostanyan. Explore and apply on the Better Policy Project website. Find the link again in description. Don't miss these opportunities. Good luck!
I think my presentation is largely a response to the one done by Charles Goodhart, because he explicitly raised the point of the media. And I'm from the media. I used to be a modeler. That is absolutely true, but a junior modeler, and now I've been in media for a while. So I think my contribution there is probably the most interesting. I can say that the simple rules that Athanasios just described would be very difficult to communicate, I think, even though they're simple in the media. But the scenario analysis, on the other hand, I think actually I'm going to make the case that it can work really well, and that the damage from not doing something like this, so pretending to be an expert forecaster, is quite real in the online media space. And finally, I just want to make some comments about, if you use the scenario approach, how can you communicate to make it work? So, for example, Charles mentioned the fan approach of the Bank of England that didn't quite work, and I might make some recommendations about how to make it work. So yeah, I'm the founder and host of Money and Macro Media, which is primarily a YouTube channel with about, for those of you who don't know it, I'm of course a little bit less known than older institutions such as the Financial Times or Economist, but we have our YouTube channel with about 340,000 subscribers all over the world, mostly working professionals and students. And our goal is to keep the audience properly informed about the global economy, which I think synchronizes well with what will be discussed tomorrow. So, as Doug mentioned, I have an academic background. But instead of, I switched from models to sort of the picture that you see there with a map of China, where importers and exporters earn foreign currency / spend foreign currency. And so I try to use animations rather than equations to explain still the same, hopefully, quality of economic stories. And actually, I often have already relied on scenario analysis in the media. So in the media, there is, of course, this temptation to use very specific and certain terms because, that sells rather well. But I didn't like that coming from a modeling background where I also use scenarios. So I have used scenario analysis, and it worked rather well for me. And the reason why partially I started this channel is that I think, if I go online, you can already see that there is considerable mistrust with the general public when it comes to central bankers and their communication. And I think that started with the global financial crisis shock, where the predictions were, of course, off by a long shot by bankers that used, I think, for simple rules for a large extent. And then I think other sources of this mistrust that I see is asset price inflation rather than regular inflation, which central bankers didn't talk so much about. Then, of course, the COVID inflation hit, which nobody had expected. And so all of these were sort of bad predictions. And if you take the scenario approach and you think about the world at an uncertain place, that is not surprising. But if you sort of present yourself as an expert forecaster, then you could imagine that the general public, believes you at first, and then when it doesn't happen, a lot of your credibility will be lost. And I think in relation to that, there's, often still a lot of jargon being used, even in central bank conferences like this, and a lot of equations, and that's difficult for the general public to comprehend. And I think the result online, at least, and the online media landscape is growing very quickly, is that conspiracy theories and sensationalism and misinformation really thrive. So I have here 3 pictures of thumbnails from YouTube, and you can see the view count. And so, for example, 2 years ago, a video was published, "Hyperinflation is already here, you just haven't realized it yet," by a channel called Economics Explained, which many people think is a serious channel. And that got 3 million views, sort of conflating very high inflation with hyperinflation, which are obviously very different. And then you have these videos about how to survive central bank digital currencies, sort of seeing a large conspiracy there. And at the bottom, you see my own video having still, I think, quite a few views, 255,000. But paling in comparison to these other much more sensationalist channels, conspiracy theories, if you will. So that is sort of the battle that I'm fighting online, to try to win back some ground, sort of for the science of economics, using clear language and animations and scenario analysis to hopefully win back some of that credibility. So that's my first point, that there is already serious damage from, I think, using to a large extent, pretending that the world is less uncertain than it really is. And that brings us, of course, to scenario analysis, which I have already used. So, for example, here you can see a picture of a video that I published 7 months ago around the election of Erdogan. Turkey's economy cannot hold out much longer, referring to the dwindling reserves in the central bank of Turkey. And I made this scenario analysis, and I also tying to this is how I presented it. This table you can see over here. So I'm in the media now, so I can be a bit more liberal with my language. So I said, okay, there's this Turkish miracle scenario, there's an orthodox recession, and there's an inflationary collapse scenario. And then I gave sort of my assumptions there. So the Turkish miracle, maybe, based on getting a lot of more loans from Arab states, such as Saudi Arabia, which I think kept the Turkish economy afloat much longer than most economists had expected. An orthodox recession, including a rate hike, which is something that surprisingly happened. And then, as you can see, sort of referring again to Mr. Goodhart's presentation, I just went ahead and gave them a likelihood. again, something I could probably do because I'm in the media. And I made clear, like, I'm a pundit. This is not scientifically calculated. This is just based on sort of my gut feeling, which you obviously cannot do, but maybe still learn something from it. Now, none of these scenarios exactly came to pass. And also, this rate hike, I sort of thought was the least likely. And actually, since then, the Turkish central bank has hiked rates a lot after Erdogan won the election. But actually, the comments under, so I highlighted a couple, were really positive. So it was like the first comment that you can see on screen, love it. Thanks for keeping it balanced and playing out all scenarios. Never change that approach. Another one's the top comments, so these were popular comments. Keep it up, really good stuff for a non-economist. Love the probability distributions and admitting uncertainty in your predictions. And I think that really stuck me as important. And my likelihood, my least likely scenario, I think ended up being the closest to reality. And yet I have received zero flack from my otherwise quite active follower base that I got it wrong, so to say. Why? I think because I admitted how uncertain the future is. Like, as you can see, all of these likelihoods are, fairly low, and also they don't add up to 100, because I always say, there's an extra dark corner, if you will. And I've had this multiple other times as well. For example, talking about a potential of a recession in Europe, where I said, this was last year when the energy crisis was at its worst. And I said, the least likely of the scenarios is a dovish scenario, so a mild recession. And that's exactly what happened. We got a mild recession. But because I had also given sort of my assumptions, saying that energy prices would need to come down rather quickly, and there should be no further like very strict escalation in sanctions. I think people actually, also there forgave me completely for getting it wrong, so to say, because actually the assumptions that I had sort of spelled out did come to be. And so my scenario, I think, made a lot of sense. And so I hope this is a little bit of evidence that it can work. Scenario analysis in the media can work, even though a lot of my colleagues don't do it. And I can also say, like, hey, I'm quite a specialized channel, so maybe it won't work for the general public. So like my viewers read The Economist and the Financial Times, maybe not a mainstream newspaper. But still, I think it saves a lot of criticism is one of the main takeaways. So my lessons learned are from a media perspective. So take it, of course, with a grain of salt. Central bank credibility is really damaged due to overconfident forecast. There is for sure a better demand for central bank communication. And my initial experimentation with scenario analysis, I would say, has been successful. But media needs views. So this is also a point that Charles raised. Well, indirectly, perhaps, is that like media loves these concrete predictions. It's super easy to report. Central bank says inflation will drop by 2% next year. But the media also loves conflict, is what I would add. The media also loves stories, is a remark also made by the Central Bank of Armenia representative. And what you can see here, for example, is a video I did on inflation, where I pitted 1.5 years ago, team temporary versus team permanent. And people love that. So I think there is a possibility to live up to sort of the media incentive, which is to get views, because that's how we make money, right? So that's the economics of media. And still go with a scenario approach. In this case, I used two scenarios: the hawkish and dovish inflation scenarios, and people loved it, and that video was successful. So I think it's definitely possible. And if you want to make it work, comparing it to the fan chart initiative that from the Bank of England that Charles talked about, I think if you want to make it work, you maybe have to take these incentives by the media into account. So you need to give them a story, so to say, like give them. And that might be counterintuitive. That might be something that doesn't come natural to central bankers or to academics. But And I would caution, of course, but you can make it a little bit easier by making these tail risk scenarios that are, for example, talked about in the report. Like the media would love that, I think. A risky X and Y scenario is what they call it, right? Or frame the A and B scenario that you mentioned as a Hawks versus Doves scenario to get this traction with the general public. I think that can really work. That's at least my experience so far. However, I think it's really important to stress what each scenario depends on. What are your assumptions? Because if you make them clear, people can see and more easily forgive you if you get it wrong, because your assumptions maybe were right, even though the end result was wrong. And then I think it's also really crucial if you do this, that you follow up. So, my Turkish scenario that I mentioned didn't come true, but I made a follow-up post saying, hey, actually, Erdogan raised rates, which was in line with this scenario and this assumption that I made that Erdogan wouldn't raise rates. So I think these are my main takeaways. And finally, I just wanted to say that, yes, as Charles said, there is a risk that people end up going with your highest likelihood scenario, or most people. But at least now you can either defend yourself, after the fact, and you give ammunition to your defenders in the broader public debate to defend you, because you have always been clear that it is uncertain. So even if the general public runs with the baseline, if they start criticizing you, it's now easy for others, like academics, to defend the central bank and saying, hey, well, this is not true. This is not what the central bank said. And that's very different, I would say, than it is today, where too many central banks, I would argue, are expert forecasters or pretend to be.